Welcome to Focus on Claims with Ernie Bray, CEO of ACD.
Hey everyone, Ernie Bray here with ACD, and welcome to this episode of Focus on Claims. Today, I have a guest on that's going to talk about an area in claims that I've wanted to learn a lot more about, diminished value. Now, this is an area that I think is always a challenge for carriers and companies trying to figure out how this works. So today, my guest is Roy Duplantier. He is a partner in a startup covering diminished value. So I figured let's get him on. He'll talk about what his company's doing and kind of address this part of the industry. So, hey, welcome aboard, Roy. Glad to have you on.
Hey, thanks. Glad to be here.
Hey, well, you know what? We've spoken before, and I have heard what's going on here in this part of the industry, and I wanted to find out more about it. But before we get into this, tell me a little bit about you. You know, who's Roy? How long you been in the industry, and what's your kind of history?
Well, just to keep it somewhat brief, I actually started out in the business about 35 years ago when I was about 20 years old.
Wow.
I was actually in the rental car business, replacement rental car business. And, when the enterprises and the agency rental cars were really just becoming, a major part of the claims process.
Mm-hmm.
And I spent about 19 years in that business and worked my way up through the management ranks and did very well. I had a great time, a great career in the rental car business. And then, of course, 9/11 hits and things start to go a little haywire in the rental car business. And so a couple of years later, I decided to get out of it. And then I started moving in a little bit into the technology business. I went to work for a couple of companies that were more technology related,
mm-hmm.
All servicing the auto claims industry. All around that part of the claims process. And learned a lot about technology, learned a lot about the ins and outs of the claims departments and how they work and what their real big pain points were. And really worked for some companies like AutoWatch was a company that was a startup at the time when I joined them in 2004. Mm-hmm. They were kind of an innovative thought process on how to communicate with customers and keep them informed of their repair process. Then, of course, we were acquired in 2011 by a bigger company called Solera. And so I was under the Solera umbrella for the last 10 years and recently have decided to move away and become work for myself and work towards this new opportunity that I've been able to land in. So it's been an exciting journey so far.
Yeah, so that's exciting, and I'll tell you, obviously you've seen a lot of this industry. Gosh, for so many years, like myself, we've been in this industry and you've seen it evolve. And with all this experience on different sides, what do you see like some of the drivers going on in the industry? Where you see tech going and where we see this kind of claims industry going? What are some of the thoughts you see out there?
It's interesting because, over the last 10 years or so, there's kind of been this shift in the industry in a couple of different fashions. One, obviously the customer focus has changed a little bit in regards to, how they are communicated with. It's the new millennial age. It's becoming the norm, the major part of the customer base now, and obviously they communicate different ways than we used to do back in the 80s when I was starting out in this industry, and technology is obviously playing a big part of what that experience looks like and how the claims are being processed and how they can not only streamline the process from the claims side, mm-hmm. But really improve the whole claims experience from the customer's point of view. And then obviously, it's all about, AI technology and what the technology can do to help, not displace or replace a lot of the in-person and manual work that's done by an adjuster,
right?
But certainly a way to enhance how they do things and how they operate. And then how the data then becomes a bigger part of the process and the decision-making nowadays. And I think obviously data is a big part of that, and the insurance companies are going to kind of really keep focusing on the data and what it's telling them and how they should react to it and what they can do to help improve their process and reduce their cost, using data.
Yeah, I mean, and I agree on that because when you think about it, And as this, the old management statement goes, if you can't measure it, you can't manage it. And data really gives you that power, I think. And carriers are starting to realize that, yeah, you really can manage it. But what's your thoughts on like the risk though? And I'm a huge proponent, obviously, of the technology and streamline things, but how do you balance, speaking to people in the past, balance that you keep that human touch with not going too far to the point where you try to automate things too much, and then you put at risk the customer interaction. What do you think a good way to try to balance that is?
Well, yeah, it's tough because you do have to balance it, and you can never get away from that human touch and that human contact. Look, we all know that the accident is a big part of an emotional part of the process for a vehicle owner, whether it's first or third party, and it can really be difficult sometimes for these people to handle and work through, and be happy with the results. So
Right.
You'll never get away from that human touch need. The question is how much technology can you institute without disrupting that balance? And, either way, technology is going to disrupt it in some way.
Yeah.
I think insurance companies just have to be really careful about how much they take that hands-off approach. Look, some insurance companies like an Esurance did a very good job of transitioning from that human touch to technology. But, it was still, a situation where, you just can't get away from it completely. So there will always be the need, for that human interaction, and technology can help it, but it doesn't necessarily have to displace it.
Well, what do you think about when you're talking about the technology? We're talking about you've got a startup here, Diminished Value, and people, their vehicles. It's a very emotional situation. Any loss or any insurance claim is stress on a person, and especially, this will lead us kind of into what your company's doing. Hey, my vehicle was in an accident. It has value. Now it's damaged. It's, and that's another side of this business that we're going to talk about. It really, that's where that empathy has to come into play. So, like I said, I believe huge that this is a combination. This is a business where you have to mesh the best of technology, the best of people. You find that balance and you give that customer a great approach. And that leads me kind of into what you're doing with your company, Accurate DIV. Tell me about the market focus of what you guys are trying to do there.
So here's the reality. I said, I haven't talked to any insurance company in my career that hasn't told me the same thing, which is, listen, we just want to make sure that we're fair and we're accurate with the customer, and we make sure they come back out whole, and that they have a good experience through the claims process. And every insurance company will tell you, obviously, that the claims process is a big part of retention, policy retention.
Mm-hmm.
So it's important that, that customers are feeling like they're being treated fairly and accurately. And the diminished value, part of this process, even though it seems to be a very small part of the overall claims process, and we're talking maybe 8% of all claims end up with some type of diminished value, claim. It's still a big part of it for those people who experience it.
Mm-hmm.
And the industry just wants to be fair with it. They just want to make sure that the diminished value that is being offered is accurate. And it really means something. And over the last 30 years, the industry has basically adopted, this standard, theory that every vehicle must have some type of diminished value if it's suffered a loss.
Mm-hmm.
But in reality, that's not necessarily the case. Vehicles, just because it's had a loss doesn't necessarily mean it's lost value.
Okay.
But there's never been another way in the last 30 years since the old Georgia, State Farm Mabry lawsuit is really kind of dictated. The only way to really measure diminished value is this formula that was created called the 17C formula.
Mm-hmm.
But for 30 years, it's been used that way, and there needs to be a different and a better and a more accurate way of determining what inherent diminished value there might be on a vehicle with a loss. And that's really what we've done based on some of the experience and knowledge that we've got in between me and my partner, and what we think we can provide to the insurance industry is an alternative way of doing it.
Okay. So what you're thinking is you think you found a way that's going to help make this process more accurate and fair to all parties is basically what the whole idea then is.
That's it. That's exactly it.
Wow. Okay. Yeah.
We are not looking to dictate that there shouldn't be a diminished value in a lot of cases. We just don't know until the data tells us that there is, and we just want to be more accurate with it.
Well, so like who can benefit from the company like what you're doing? Give me some sample use cases of like how, a claim could be handled.
Well, listen, the biggest advantage or benefit, really, it's across the board. The consumer, the insurance company, obviously, wants to be more accurate, more fair with their settlements, but they just never had the solution that gave them the information to present and offer to the consumer that can be really validated. And that's really what we want to do is we want to give them a way to validate what they're offering, that it is fair and accurate. So not only does the insurance company benefit because they know it's validated, but the consumer can benefit because it's validated. And of course, the repair shop, plays an important role in this. As long as the car is repaired back to pre-loss condition, then the shop should get credit for doing that. And that's really what it comes down to.
And that's key. This is really interesting to me because I think it really is about being fair to all parties, which is super important in all aspects. That's the right way that things should be handled. I have a question, and if you could explain this now. If the whole diminished value idea. Now, if I have a vehicle, I get in an accident, and if it's repaired with all brand new factory parts, is there still going to be diminished value, or or is that, if I'm putting all brand new parts back on, would that put it back to basically pre-accident condition? Tell me a little bit more about that. Like, does that make a huge difference?
Well, it certainly can. Of course it does. If a vehicle, look, the standard definition of diminished value is the difference in value from the day prior to the loss to the day after the loss. As long as repaired back to original pre-loss condition, using obviously the right repair procedures and the right, the right information and the right parts and everything else that goes along with it, it doesn't necessarily even have to have an OEM part replacement. There really is no standard way of calculating diminished value. There's a lot of factors that go into it.
Okay.
But if you look at every diminished value on its own merit, then you really come up with a more accurate value. You just can't say across the board that just because a vehicle has been repaired back to pre-loss condition that necessarily didn't lose value, or it did lose value. The data should tell you whether or not it did or didn't. And that really depends on what the real steel, sales data tells you.
So really,
and that's what it comes down to.
So really, every case is unique then, basically. You have to look at each case.
It should be unique.
Got it.
That's
Okay.
right.
So as a tech company, your experience in the industry, going into different carriers and working out there, what do you think that the challenges are to adopting of new solutions like this? Because, I think the industry is always open. As you can see, there's so many players in the insurtech space now, and you have a lot of different neat companies out there offering different solutions, which are very intriguing to me. That's why I love having guests on the podcast like this to talk about new things out there, to let listeners hear more about things. What are the challenges, though, breaking in and getting, maybe an insurer to listen or actually see the value in different things? And just your experience, is it tough? Is it difficult to see and show those things?
Well, look, change is always difficult, right? So, for the average insurance company out there, they have already implemented certain processes and certain procedures that they follow. And, they should be comfortable with those. So anything new that comes along and anything that changes their current process, is a disruption and doesn't always become a valuable disruption, but in a lot of cases it can. And, one of the things that we have to do from a technology standpoint is to make sure that we make it a seamless transition or a seamless process. And it doesn't necessarily disrupt what they do today. It just gives them a different way of doing what they do today. And that's kind of what we've tried to focus on, is just giving them an alternative way of determining inherent diminished value, rather than changing the whole process on how they do it. But we have made it easier, more seamless, more automated, and a lot more efficient for them to be able to do what they do today for diminished value. I mean, we've heard processes all across the board, different formulas are being used, different modifications of the 17C are being used all over the place. So, insurance companies are all kind of all over the place a little bit, and not using one standard practice. But that can be, detrimental too, because a standard practice makes it more accurate, more fair for everybody across the board. And that's really where we think we can provide some real value.
Okay. That totally makes sense. So I'm, my company is on the claims side. This is what we do at ACD. We're in claims. And so this niche that you're talking about, I'm really interested to find out how carriers could implement this into their process. Tell me a little bit about how this could be something that, could make the adjuster's day easier, how they could, be more efficient. Tell me how could the adjusters utilize this?
Well, first of all, we made a very simple web-based application that they will have the access to log in, and within 90 seconds input some critical data, some required data, and spit out a result within 90 seconds. Today, they do a lot of the work that we're talking about manually, and they have a modification of a different formula they're using. So they do it on spreadsheets in a lot of cases, and just make it a little bit more comprehensive, where not only does it take more time, but you also then have to subject a specific expertise like an appraiser to be able to read an estimate and make those modifications and make those determinations. But again, the challenge that the industry has is all of this, all the ways they're doing it today have a lot of subjectivity in it, where our solution really takes the subjectivity out of it. It's a really much more objective value, because you don't have to have an expert do this anymore. No one has to sit and read an estimate and determine how severe was the damage, how, where was the damage on the vehicle, and what that impact would have on any inherent diminished value. All that is kind of taken out of the equation now, and it's all objective now based off of real steel data.
So let's say a carrier would like to utilize this. How do you go in and present to a carrier and maybe do a proof of concept and show them comparable to what they're doing now? Like, take me through how like a carrier could implement this, how easy it would be to test it out and try it out.
Yeah, the first thing obviously is that, we offer them the opportunity to provide us with a closed file review, where we'll take 2025 of their
makes sense.
prior diminished value claims. We'll run them through our platform and show them the results, and show them how we got the results in the data behind the results. And once we do that, obviously they can compare it to what they did before, the results they had before. So that's one way, obviously, we're getting them. And look, we've seen values all over the board. There are many cases where we've come up with a lower diminished value, and there are many cases where we've come up with a higher diminished value. So again, we're not sitting here and offering the fact that we're going to try and reduce your diminished value settlements. What we're saying is we're going to be more accurate.
Well, that's hence the name of the company.
Yeah,
Accurate DIV. We're trying to be accurate. Accuracy is key.
That's it.
Exactly.
But we offer, the opportunity for them to pilot our system for, a month or so, and put 2025 claims into the system, see how easy it is to process one, and what that efficiency looks like, and then what the results are. And then, of course, we provide all the data and the documentation behind it so that they can share it with the consumer, and then go defend, and validate the data or the offer that they're making.
Well, this sounds really, like I said, really interesting to me. It sounds to me like this is about transparency in this process. It's about transparency. So that's really exciting. So, you know what? I know we're going to be wrapping up here, but I wanted to kind of, get it as an entrepreneur at heart. And I can tell you guys passionate about what you're doing, because I love these stories about new and, exciting solutions. What are some tips for people out there you give, being in this space and startup space for years? You've been around all this. What are some tips you give to people? I'd like to say tips that, to show, breaking into a market like this and trying to get, a carrier and insurer to see how they could get a good ROI on what they're doing. What are some tips you give for entrepreneurs out there trying to break into the industry?
Well, look, there's a couple of different things that I would recommend. First, obviously, you have to find the need in the industry. There's always a way to do something a little bit better than the way it's been done before. The question is really what's the real value to a carrier to make a switch to something else?
Right.
And, of course, being around the industry and talking to a lot of people, knowing a lot of people and just picking some brains of some of the experts and some of the leaders in the industry, was really a wake-up call for us to know really where the real obvious needs are. And diminished value just seemed to pop up as a major need for something that hasn't been addressed in over 30 years. And, it's all about risk and reward, right? No risk, no reward. And we felt like it was a good time to take the risk and make the jump and give this thing give this opportunity a go and provide the industry with something new and different and innovative, for diminished value. But there are a lot of different things in the process, a lot of different solutions in the process that always could look for improvement. And if somebody has the opportunity to identify that and has the ability to take the leap and the resources obviously sometimes it takes to make that happen, don't be afraid to do it.
That's great advice, and I think this industry, a lot of times there are niches, like this is an area that I really, even have been in the industry as long as I have too. It's one I've really didn't really have a great focus on. And it's great to hear the story because I think it's always been an area that it was a lot of confusion. And I think like you said, for the entrepreneurs out there, finding that niche is really key. That's really the key because there are so many different areas that can be that area where it can really add value to an insurance company or just the process in general. So as we wrap up here, we're ready to close. Is there anything exciting, any news you have going on at Accurate DIV you'd like to let our listeners know about, or anything to talk about that's going to be coming up soon? Because I know here we are, we're getting toward the end of the year. But I know 2021, gosh, what a heck of a year it's been with the COVID thing. But I think a lot of carriers are looking to streamline processes and really look at all the different things going on. But is there anything you guys like to announce or talk about?
Look, we're a startup still, so we're still in our infancy stages. We've had a lot of interest so far in what we're doing, and we're talking to a lot of people. We're talking to some major insurance carriers and some mid-size and some smaller carriers. We're just getting our name out there now and looking for, the opportunity to provide the industry with something alternative that they can look for. And look, we think that the data that we're going to provide in regards to diminished value is critical to this, because there's never been an opportunity for any insurance company to look and see how we're performing against our peers. And we're going to be able to provide that data going forward. Once we start getting that volume in there, we're going to be able to really drill down into specific data in regards to geography, in regards to type of vehicle, in regards to type of repair, in regards to a lot of things, and how all that really, ends up in the calculation for diminished value. And there's never been a way to share the data industry wide on how things are going. You can look at, writing an estimate, and you can look at data, days on end about what those estimates look like and how they're calculated and what the data should be. And you can look at how you compare against your peers. With diminished value, there is nothing like that. So we're really excited about what we can provide in regards to data and historical information in regards to diminished values to the industry. And we're just excited about getting it started.
Exciting stuff, Roy. That's exciting stuff. Well, as we close here, hey, let our listeners know if you have a carrier out there, you're anybody interested in this whole diminished value process, how can they get a hold of you and how can they find the company?
It's real simple. My mobile phone is available to out there, and they can go to our website, accuratediv.com, and take a look at our information. Connect with me on LinkedIn. My name is out there, and looking forward to talking to people. My email, roy@accuratediv.com, is an easy way to reach me, and I'm looking forward to to really getting this information out there.
That's great. Well, it's been great having you on. And I think for our listeners, it's like I said, this is a part of the industry that was very interesting to me. Well, great to hear the story about you guys. And I look forward to watching how you guys do. So
yeah, well, I appreciate it, Ernie. And I look forward to working with you even more.
All right. Have a great one. And thanks for being on.
Thanks, guys.
This has been Focus on Claims with Ernie Bray, President and CEO of ACD.